Hello everybody, welcome back for another video. Hope you're all doing fantastic and that you are all having an incredible day, and without further ado, let's jump right into it. The number of staked Ether continues to increase following the release of Shapella, which enabled withdrawals for locked coins on Ethereum's beacon chain following the merge. Ethereum's massive technological transition from proof of work to proof of stake. Proponents were concerned about withdrawal functionality and possible selling pressure on the market. No, it was actually the opposite. It was the people who don't have any Ether who kept on telling everyone else that the price was going to collapse, and I made sure that I told all of you that there would not be a flood of Ether that would be hitting the market. Both concerns were rendered non-events, this said Nansen's Martin Lee, as Shapella galvanized users and entities alike to stake more tokens. At press time, the number of tokens currently staked on Ethereum is 22 million coins. That's around 18% of all the Ether that there actually is. The interesting part is, at the same time, stake tokens continue on the upswing. Token balances on cryptocurrency exchanges are also dropping. Balances on cryptocurrency exchanges have dropped below 30 million coins. This now means that there are almost more staked Ether than there actually are Ether on cryptocurrency exchanges, and this trend is probably going to continue for a very long time, especially after the entire Coinbase and Binance fiasco. Even when we had FTX last year, geez, time's flying by. One of the main things was that a large number of people began to realize that they could, and then began to, actually self-custody their own coins. And since the entire Binance, SEC, Coinbase, unregistered security thing, a lot of people more people have taken their coins off of cryptocurrency exchanges and now self-custodying. They're taking their coins off of the exchanges and they have them on ledgers now. So cool. My sense of reality continues to dwindle as we get news that there are almost more coins locked into Ether. Just to validate it, for those of you who don't know, there are many other ways to also lock your Ether into Ethereum. So logically, there are probably cumulatively more that are staked and locked into the Ethereum protocol than there actually are on cryptocurrency exchanges. And alas, we are still not at a $5,000, $6,000, $7,000 Ether, regardless of how much good news we continue to get on a near daily basis of everything that's going on. So at some point, we are going to hear that there's more Ether staked and locked away into protocols and smart contracts. And what's the other one? What's the thingy? Wrapped protocols than there actually are on crypto exchanges, and the price will probably go down that day because that's just the market that we're in. That's the not a lot of Ether on exchanges. We also had that news a couple of days ago as well for Bitcoin. For those of you who missed it, there continues to be a massive decline in the amount of Bitcoin on cryptocurrency exchanges as we get news that large entities are buying, mining it, and also beginning to try to make physical Bitcoin ETFs within the US of A. So our market will make sense one day, but today is not one of those days. And yeah, let's move on. Also, when nothing makes sense anymore, the parent company of one of the largest mobile cell service providers in the United States is becoming a validator on Polygon. What? No, that can't be. The coin's price would have skyrocketed, right? In a new company announcement, Deutsche Telekom, the conglomerate that owns T-Mobile, says it will begin validating nodes for Polygon, just like it's been doing for other prominent crypto assets. I'm going to say that one more time. Maybe I have to rephrase it. T-Mobile, Deutsche Telekom, has announced that they are going to begin validating or be a validator for transactions on Polygon. You know, the one that I just made a video on for both channels, and I was telling you and have been saying for a while that regardless of what the SEC says, other companies around the world are going to continue using it. And now Polygon has like 30 like high profile. Polygon, I believe, has over 100 different partnerships right now, but there are 30 high profile ones like the Nike, the T-Mobile, the Starbucks, who are actively using them. And it's only question mark a matter of time before people question mark figure this out, because you know, we keep getting good news, and at some point the market just has to be like, oh snaps, I remember hearing this before, this is one of the greatest news stories for the coins that I and you know, at some point it will work out. Deutsche Telekom subsidiary Deutsche Telekom MMS extends its validation nodes to Polygon, providing staking and validation services for the proof-of-stake POS network and Polygon SuperNet solutions. Deutsche Telekom MMS is one of only 100 validators on the Polygon network. I also didn't know these other things. Apparently, T-Mobile also is a validator for Ethereum, for Flow, Chainlink, CeLo. I would say Cello, but it's missing an L, so CELO, and something called Q. So, yeah, Dirk Roeder, head of the Blockchain Solution Center at Deutsche Telekom, says that becoming a validator for Polygon will help the firm fully unlock the potential of blockchain technology. I didn't even have to read anymore. So every day we get really good news. I think the worst news that we've gotten recently was the gigantic monster that is the SEC, but it feels like the SEC does things just to make sure that we have bad days. Besides that, we would only have absolutely incredible news. And I think for those of you who missed it, I think, oh yeah, no. This was a couple days ago. The SEC is allegedly now, wink, trying to, the word's not consensus. They're trying to end the lawsuits with Binance and Coinbase, basically allegedly announcing that they just kind of have to, you know, hand them some money and then the lawsuit is over. So yeah, that's the worst news that we've gotten. Besides that, everything else has been peachy keen. The cryptocurrency market continues to not be responsive regardless of how great the news actually is. This is the actual T-Mobile website right here. It says Deutsche Telekom announces support for Polygon blockchain infrastructure. As you might have imagined, this was incredibly spoken about news. It was well popular news, but I still think a lot of times people hear amazing news about a coin and simply also don't accumulate it. And that is the prerogative of everyone out there. However, I will take a different stance. And I already told you before since last year, Polygon is, there's not a word above bullish, hyper bullish. I know there's like, I think we need a brand new word. That's what I am on Polygon, because the amount of partnerships are, it's not even like impressive anymore. It's more like staggering. It's like, if you have 3 of these companies, like, oh, wow, you got really lucky. Cool, you have a couple of partnerships. But the level of these partnerships now is like, okay, this lets me know that all the rich people, all the rich companies are absorbing all of these coins right now. I was thinking of Goku doing the spirit bomb, like that kind of thing. So we'll see. Yeah, you'll see when the price completely goes haywire and everyone's questioning, and then you look back at my 9,000 videos that I've made and you're like, oh, this makes sense. That's the Deutsche Telekom is going to be a validator on Polygon. Also tying into this as well, for those of you who missed it, Credit Suisse and a Deutsche Bank-backed program called Taurus are also deployed on, you guessed it, on top of Polygon. Credit Suisse allows or aims to allow financial institutions to incorporate corporations to issue. Can I not speak English? The Swiss firm aims to allow financial institutions and corporates, there we go, to issue tokenized assets on the Ethereum. What was wrong with me? Like, why can't I speak English anymore? I don't know. And there's a photo of a bull, so that's kind of how I'm feeling. So Also, for those of you who missed it, I don't know if we went over this. It feels like we did, but I don't remember saying the words. I know that sounds ridiculous, but alas, here we are. So Nike has recently released another new sneaker thing on their platform called .swoosh, in working with Artifact. And they also recently announced that this new sneaker from .swoosh is also going to be on top of, yeah, you guessed it, on top of Polygon. So, yeah. That's all the Polygon news. I know there was a lot. It's because there's always a lot of Polygon news going on. So the amount of partnerships they have continues to balloon larger and larger as Polygon gets bigger. I do sincerely wonder what this coin's price is going to be during the next bull run, when it has a 95x inactivity on it. The people who will be buying it normally from FOMO, the people who will be building and using it because they're like, oh, Nike's using it, Starbucks is using it, is using it. So yeah, I have no idea what the previous all-time high was, but I bet my bottom dollar it's gonna be quite intense whenever we have the next bull run. That's 95 million companies are using Polygon news, and I hope everyone's paying attention. Once more, no, you can't tell me during the next bull run that you didn't know all this stuff was happening, because I bring you news every day. And yeah, let's move on. Also in the news, on the 15th of June, Coinbase announced that customers can now earn 4% rewards on the USDC stablecoin. For those of you who don't know, Coinbase has a stablecoin. There we go. It's called USDC. It's from a company called Circle, but Coinbase also owns the company Circle, and therefore it's Coinbase's coin. Recently, there's some really weird, Final Fantasy kind of battle going on behind the scenes where everybody wants their stablecoin to be the best stablecoin in the entire world. And regardless of the two mainstream news publications who continue to, in vain, release large amounts of articles talking about how terrible Tether is, Tether still reigns supreme. So on top of that, Coinbase has been pushing quite a lot recently, trying to get their stablecoin to the top of the list, as I believe Binance's stablecoin was also is the second largest stablecoin. I don't remember. Earlier this year, or was it the end of last year? It doesn't matter. Binance announced Binance knows how big that they are, so they delisted a bunch of other stablecoins from their platform and basically tied all the trading pairs to their Binance US dollar. And then about a month later, Coinbase did the exact same thing, but they used a Coinbase kind of lie, and they were like, we are doing this to help our users. We like that they only use one coin, as opposed to just being like, we want our coin to have millions of dollars of more volume, because Tether announced that they made, I think it was $250 million just in fees or from people using their coins. So of course, Binance and Coinbase would want the exact same thing. Recently, you may have noticed, or you might not have noticed, so I'll tell you. A lot of companies have realized that they can take advantage of the lack of good banks or what banks are doing. So Apple recently announced a couple of months ago that if you keep basically in a bank account with Apple-esque kind of thing, I think they also give you 4% returns on your money. Now, you roll your eyes and you go, 4% is not a lot. But then you sit there and realize banks were giving 1/10 of 1%, half of 1%. I've seen some banks boasting on bus stations around me that they're now offering 1% on your money. And I'm like, you've seen that inflation is like 9 million right now, right? The 1% that you're giving me isn't actually impressive. So this is why I believe that Coinbase is saying that they're going to be giving a 4% return if you are actually holding their stablecoin. It's not the best, but I do know some people, especially over the course of a market downturn, who would be more than willing to actually get that 4%. The really weird part, it says it's somewhere around here. It says Coinbase is now allowing users to earn 4% rewards by holding USDC on the centralized exchange, according to an announcement. They said, grow your savings with a rewarding, secure digital dollar. Global Coinbase customers can now earn 4% on the stablecoin. Where is it? Somewhere around here. It's somewhere around here. Basically, yeah, there we go. They say that the annual percentage, the 4%, is subject to change. So you may not always get that 4% that you're trying to. It's a little weird. This is a very odd situation where we have governments also trying to make their own stable coins. The companies who have them are trying to make sure that they remain at the top of the list and kind of like don't get dethroned by other people using them. So they're trying to incentivize people within crypto to kind of, I mean, if you're able to, I'll say it this way, if you don't have to like stake them and you can continuously move your coins back and forth off of the exchange, then it's not really a terrible deal. But if there's like a lock up period, because there are certain platforms, I won't tell you which one, so I'm not like funneling you to one place. There are certain platforms that will like, they tell you like, hey, you keep your coins with us, we'll give you money back. And this is, you know, regardless, you know, if you move it, of course, you stop getting rewards on that date, but for every other date before, you still will get your rewards. So I don't know if Coinbase is doing the exact same thing, but this was relatively popular. A lot of companies are trying to figure out ways to get people to hold money with them. Stable coins are basically the new fiat currency. They're digital, they're on blockchain, so people kind of within the cryptocurrency space tend to like them a little bit more, but it's literally just digital fiat. So I currently have no love for them. I saw people asking before on Twitter. I didn't even know where did that question come from? Why did someone ask me this? If I have stable coins in my portfolio? No, that's not even a thing. I mean, let's be honest here. If Coinbase was offering like 11% return, guess who would have a stablecoin portfolio on the side? But at the moment, stablecoins don't do anything. They stay relatively stable. The coins that I am currently holding, I believe that these coins are going to at least make a 3x. Some of the coins will probably do a 10x to at least what they previously were before. If you can explain to me why I should have stable coins in my portfolio, maybe I will change my view on them. But besides that, that's simply not going to be a thing. That's the Coinbase is basically mimicking Apple at the moment with their 4% rewards. I would look into how much their fees are in that. Are the fees that they're keeping? So what happens with banks is, for those of you who don't know, when you have a bank account, they say in 1,000 years before, we'll give you 5% on your money. What the bank is doing is they're taking your money and they're trading with it. They're doing other things behind the scenes to make the bank money. And the excuse my French, but the backhandedness of it comes down to the fact that the money that they made, they give you 5% of it and they keep the other bulk of the money. So in this case, is Coinbase keeping the other 96%? Are you only getting the 4%? Or are you getting 4% and then they're also charging you a fee as well? Coinbase has very high fees. I'll never forget it. One of their products has a 25% fee when you are staking. So if you made 1,000, even after they're taking other things, they're taking a quarter, $250 of what you already made. So make sure to look into the fees as well. And don't forget, throwing this out there, there are self-custody methods. There are desktop wallets that are self-custody, and you are able to stake your coins on those, and you're also able to actually even use their platforms to also earn rewards from stable coins as well without having to have your money on a centralized exchange. Just thought I'd throw that in there because a lot of people believe that the only way to make money from things is by using a cryptocurrency exchange's products. No, you can do these things by yourself. Even the Ledger wallet, they also have other things where you can earn rewards. I think you can also stake Cardano on there. There's a reason why I use Ledger. You know, you don't have to trust your coins with crypto exchanges. We live in the future. There are other options now. Yeah. I hope you've all enjoyed. I hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope it is absolutely fantastic. Thank you all, every single one of you, once again, for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.